Hello, my name is Isia Zun Nurani. NPM 23,411,066. Class Management 23. I will explain the material about ethics and behavior in accounting. Ethics and behavior are the pillars of the accounting profession. While technical skills allow an accountant to process data, ethics and behavioral understanding ensure that the data is honest, reliable, and socially responsible. This field examines the psychological pressures that lead to ethical dilemmas and the standards required to maintain professional integrity. 1. Definition and philosophy. Ethics and behavior in accounting is the study of how moral principles and human psychology interact within the financial profession. It goes beyond simply following laws. It explores the why behind ethical lapses, such as greed, fear of job loss, or pressure from superiors, and establishes a framework for making the right decision even when faced with significant personal or professional conflict. 2. Key characteristics. Integrity-driven. Prioritizing honesty and moral soundness over personal gain or departmental pressure. Public trust. Recognizing that the ultimate client of an accountant is the public and the financial markets, who rely on accurate information. Psychological awareness. Understanding that good people can make bad decisions due to cognitive biases or extreme environmental stress. Proactive skepticism. Maintaining a questioning mind and being alert to conditions that may indicate possible misstatement due to error or fraud. 3. Scope of ethics and behavior. The conflict of interest. Accountants often face situations where their personal interests, like a year-end bonus, clash with their professional duty, reporting a loss. This area studies how to navigate and disclose these conflicts to maintain objectivity. The pressure of the hierarchy. This explores how obedience to authority can lead accountants to manipulate records at the request of a high-ranking executive. Behavioral accounting analyzes how to strengthen an individual's moral courage to resist such pressure. The fraud triangle analysis. Ethical studies focus on the three elements that lead to behavioral failure: pressure, financial need, opportunity, weak controls, and rationalization, justifying the wrong act. 4. Key dimensions of ethical behavior. Individual dimension. The personal moral compass of the accountant. This involves self-discipline and the internal strength to uphold the code of professional conduct. Organizational dimension. The tone at the top. If the company culture prioritizes results at any cost, it creates a behavioral environment where ethical shortcuts are encouraged. Professional dimension. The standards set by global bodies, like the IFRS or local accounting associations, that define the boundaries of acceptable professional behavior. 5. Significance in the financial world. Protecting reputation. Ethical behavior is the greatest asset of an accounting firm or department. Once trust is broken, it is nearly impossible to regain. Market stability. Global financial markets depend on the ethical behavior of accountants to provide the transparency that allows investors to trade with confidence. Prevention of legal consequences. Understanding the behavioral triggers of fraud allows organizations to build better internal controls and avoid devastating lawsuits or bankruptcies. Promoting fair competition. When all accountants behave ethically, it ensures that businesses compete based on actual performance rather than who is best at creative accounting.